Hello, my name's Luke Webster and I'm the Technical and Compliance Manager for Wiltshire Pension Fund. And today I'm going to run through your annual benefit statement with you, which you should have received if you've been paying into the Local Government Pension Scheme, or LGPS for short. If you haven't done already, then I'd recommend having your statement in front of you, as what I'm going to do today is run through each section of the statement to explain how we've calculated the figures and what they mean to you. So before we start, just a quick notice to say that the content of this video is based on our understanding of the scheme rules as at the time of preparation, but this legislation can change in the future. The purpose of this video is to give you an overview of the information provided on your statement and how these figures have been calculated. However, it will not take into account your personal circumstances. The figures are designed to be a rough illustration of your pension, so it is advised that they're not used to make any financial decisions. Before making any financial decisions, we would recommend speaking to an independent financial advisor. So I've obviously used some dummy details for the statement we'll be running through today, but the formatting and layout should hopefully look pretty similar to yours. So starting at the top, personal details section is pretty self-explanatory, but there are a few points worth mentioning. So firstly, you'll see that we display your partnership status, and this will be based on what we hold on record for you at the time. Now, Mr. Bloggs is married, so as we move through the statement, we'll see that there's a survivor's pension entitlement displayed. If you're not in a recognised partnership, or you are and we don't know about it, then this will show you as single, and the survivor's pension on the rest of your statement will show as 0. Moving down, we'll have the date you joined the scheme, as well as a section of the scheme you were in on the 31st of March 2020. So for most of you, this will show as the main scheme. But if you've elected to go into the 50-50 section, then this will show as 50-50. And then right at the bottom, we have your pay information, which is what your employer has provided us with. And this is probably one of the most important details to check, as this is what's used to calculate your pension. So the first figure should be the actual pay you received from the 1st of April 2019 to the 31st of March 2020. And this is what's used to calculate your career average benefits, which I'll explain a bit further in a few slides' time. It's worth noting that if you've been on reduced or nil pay during the year, whether that's due to sickness or injury, or if you're on child-related leave, then this figure should include your assumed pay, which is essentially the pay you would have received had you not been off. If you think this does apply to you, but you don't think it's been included in this figure, then you should contact the fund and your employer immediately. And then the last figure is your full-time equivalent pay, which for those of you who are in the scheme before 1st of April 2014 will be used to calculate your final salary benefits. If you join the scheme after 1st of April 2014, then you won't have any final salary benefits, so this will show as 0, as it won't be applicable to you. And then finally at the bottom, you'll see the little statement there about the information and how important it is. So if you believe that anything is incorrect, then you should contact your employer and the fund straight away. So moving on to section 2, and the purpose of this section is to show the value of your pension as at the 31st of March 2020. So what I'm going to do now is show you how we come to these figures, starting with the annual pension, which for Mr. Bloggs is £6,205.09. So the LGPS is a defined benefit scheme, which means that rather than building up a pot of money, which is invested in stocks and shares, your LGPS pension is calculating using set formulas. So Mr. Bloggs joined the fund in 2006, which means that he has 3 different formulas that we need to calculate. So before 31st of March 2008, the LGPS was a final salary scheme, and it's commonly referred to as the 80th scheme. And the reason it's called this is that Mr. Bloggs will receive an 80th of his final pay for every year of membership he's built up. So between 2006 and 2008, he worked full-time, so he built up 2 years membership. And his employers told us that his estimated final pay is £24,500. So an 80th of £24,500 times by the 2 years membership comes to £612.50. In 2008, the LGPS remained as a final salary scheme, but the rate changed from an 80th to a 60th. So using the same principle, a 60th of his final pay of £24,500 times by the 6 years membership he has in that period comes to £2,450. Now, since 1st of April 2014, the normal pension age in the scheme is your state pension age, which for Mr. Bloggs is 67. However, the normal pension age for his final salary benefits is 65. So what we've done in previous years is apply a notional late retirement increase to his final salary benefits on the basis that this part of his pension would be paid 2 years later than we would expect. Now what we've done this year, which is different to previous years, is we've removed these increases from the present value of the final salary benefits, so sections 2 and 4. However, we have still included them in the projection section of the pension under section 5. Now, if I've lost you slightly here, then don't worry too much. The only reason I mention this is because in some instances, it may appear that the value of your final salary benefits has actually gone down or not increased by as much as you thought it would when comparing it against your 2019 statement, when in fact it's just because we've not included these notional increases in these sections of your statement. Now on top of this, final salary benefits, we need to add in the value of his career average pension, which he's building up since 2014. So since 1st of April 2014, when the scheme changed from a final salary scheme to a career average scheme, your pension has been building up each year at a rate of 1/49th of your actual pay. So for Mr. Bloggs, he's received £24,500 each year. So for 2014-15 at the top line there, we've divided the 24,500 by 49. We then increase this by the cost of living, which is where the revalued earnings part of the acronym comes in. And this then gets added to his pension account at the end of the year. We then do exactly the same the next year, and so on and so on. So by the 31st of March 2020, Mr. Bloggs has £3,142.59 in his care account. Now you might be wondering why we haven't increased this by the cost of living for 2019-20, which was 1.7%. And the reason for this is that this applies from the 1st of April 2020. So as this statement is providing you figures at the 31st of March 2020, it doesn't quite apply yet. Instead, this will be reflected on next year's statement. So if we go back to our calculation and add this amount of care back in, then we come to a total of £6,205.09, which matches what was shown on section 2. Now, broadly speaking, the amount of elements you will have to your pension will depend on when you joined. So if you joined after the 1st of April 2014, then you will just have a care account. If you joined between 2008 and 2014, it's likely you will have a 60th element of final salary and a care account. And if you joined before 1st of April 2008, then it's likely you'll have all three elements, just as Mr. Bloggs has. Now, because Mr. Bloggs was in the scheme before 1st of April 2008, he also has an entitlement to an automatic lump sum, which is equivalent to 3 times the 80th element of his pension. So again, if we ignore the notional increases, this comes to £1,837.50, which was 3 times the £612.50. If you don't have any membership in the 80th section of the scheme, then this will show as 0 on your statement. But when you do come to retire, you will be able to exchange some of your pension to get a lump sum. You'll see that section 2 also shows the death in service benefits. So if Mr. Bloggs was to die in service, then a lump sum equivalent to 3 times his annual pay would be payable. So 3 times the 24,500 comes to the 73,500 you can see there. As I mentioned at the beginning, Mr. Bloggs is married, so if he was to die, an annual survivor's pension of £5,673.22 would be payable. The next section will show who you've told us you'd like to receive the lump sum death grant in the event of your death. Now, the fund has absolute discretion over who to pay this to, but making a nomination is the easiest way to let us know of your wishes. So if you haven't made a nomination, just as Mr. Bloggs hasn't, or if you would like to update an existing nomination, then you can do this on your My Wiltshire pension account. So moving through to section 3, and this is a breakdown of the care pension you've built up over the year. And this is exactly the same as the table we looked at a few slides ago, but just in a slightly different format. So what we basically do is we start with the actual pay figure, which is what the employer has told us is 24,500 for Mr. Bloggs. This is then divided by 49, which comes to 500. So unless you've been paying into an APC or you've transferred in any pension rights during the year, then this will be the total pension build up for this year. We then add this to the amount of pension you have already built up, which is then increased by the cost of living, and then this will give you the total amount of your care account as at the 31st of March 2020, which, as you can see, should then correspond with the table we looked at before. So if you have any final salary benefits, then section 4 will provide you with a breakdown of the different elements. This is calculated exactly the same as in section 2, so I won't go through it all again, but this does provide you with a separate breakdown of the calculation. It's also worth noting again that this section doesn't include the notional enhancements that have been included in previous statements, so this might explain any differences you might see. And again, if you don't have any final salary benefits, then this section will be blank. So in the final section of the statement, we provide a projection of what your pension may look like if you were to continue paying into the scheme up until your normal pension age. So this assumes that you will continue exactly as you are up until this date, and it won't take into account any future cost of living increases. So just to break this down for Mr. Bloggs, so the service he built up in the final salary scheme has already been banked, and as we're assuming that he stays on the same pay, then the value of these benefits will not have changed from the previous sections. Now at the beginning of the video I mentioned that the late retirement increases were not included in the present day value of the benefits, so in sections 2 and 4. However, we have included them in this section of the statement. So what we're doing here is a projection up until Mr. Bloggs' normal pension age, which is 67, and that's in line with his new state pension age. However, his normal pension age for his final salary benefits is 65. So this element of his pension is essentially being paid 2 years later than expected. So he would have 2 years worth of enhancements added to the value of these benefits. So the current rate is 0.01% for every day late, but this may be different when he comes to retire. So that's 730 days at 0.01%, which comes to 223.56. We then add in the value of his care account up until the 31st of March 2020, which we've already established from section 3. And on top of that, we add in the care pension he's estimated to build up in the remaining 22 odd years he has until his normal pension age. So if we add all that up together, that comes to the £17,810.84, which would be shown on the section 5 of his statement. Mr. Bloggs also has his automatic lump sum. So again, the service has already been banked and the pay is the same. So that's the same calculation as we looked at before. Then we add in the small enhancements for the lump sum, which is currently 0.001% for every day. And that comes to a total of £1,850.91. So thank you for making it to the end, and hopefully you haven't come away more confused than when you started. We do appreciate that pensions is not the easiest of subjects, so if you do have any questions, then please feel free to get in touch with us on the details shown on screen.